Today we're going to talk about W-2 and withholding mismatches. We're going to talk about how small payroll errors can trigger IRS and combined annual wage reporting scrutiny. Many taxpayers assume that a W-2 mismatch is just a paperwork issue. Well, admittedly, it often starts that way. But when wages or withholding amounts do not match the IRS's third-party data, the issues here can escalate quickly. For employees, that may simply mean a CP2000 notice. For employers, it may trigger a combined annual wage reporting case, commonly called a CAWR. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney CPA, and I've additionally earned a master's degree in taxation along the way. I'm the owner of the tax law offices of David W. Klasing, and to date, we have 24 offices in 11 states to service you nationwide. Today I'm going to explain how IRS detects W-2 anomalies, why withholding mismatches matter, and how seemingly small payroll errors can create serious civil and criminal tax exposure. Well, how does the IRS go about finding W-2 problems? Well, the IRS runs automated document matching programs. These programs compare your tax return to third-party information returns, including Forms W-2. When the numbers don't match, the IRS often issues a CP2000 notice when it involves employees. For employers, the IRS uses the CAWR program to reconcile Forms 94X against W-2 and W-3 totals filed with the Social Security Administration. So what are the common employee side problems here? Well, high-friction W-2 issues include missing W-2s, incorrect Social Security numbers, underreported wages, or incorrect withholding amounts, fraud pattern if you pump those through the roof fraudulently, and corrected Forms W-2C, issued after the return was filed. If your employer will not correct an issue with your W-2, the IRS may permit the use of Form 4852 as a substitute, but don't do that without counsel. So what are the employer-side reconciliation failures here? Employers face parallel risk when payroll records do not reconcile. The IRS automatically compares Forms 941 and other 94X filings, W-2 and W-3 totals, payroll system reports, and tax deposits. When these numbers do not tie with each other, the IRS may expand the inquiry into payroll controls, record integrity, and trust fund tax compliance. So, let's get into the criminal tax exposure. Well, most discrepancies start off as civil, but criminal tax risk increases when the government starts to believe that wage or withholding data were intentionally false. That may include fabricated payroll records, false withholding claims, identity misuse, or willful failure to collect and remit payroll taxes, a very common criminal tax fact pattern. California creates parallel risks here. California may add another layer of scrutiny. The California Employment Development Department reviews quarterly filings, including Forms DE9 and DE9C, with federal and California records. If these records tell different stories federally in the state, that inconsistency itself can intensify your problems. Well, how do you go about fixing payroll tax problems safely? Well, the safest approach begins with discipline. Whatever you do, do not backdate payroll records. Do not alter reports or improvise explanations. Instead, you need to preserve the original records. You need to reconcile the data and correct the filings using the appropriate forms, such as Form W-2C. So in closing, if you're dealing with a W-2 mismatch problem, a withholding discrepancy, a CP2000 notice, a CAWR inquiry, this is the stage to act carefully. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help taxpayers and businesses resolve payroll reporting issues, all the while minimizing civil and criminal tax exposure. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. You won't regret it.